Welcome to another edition of TokStocks. I'm your host, Keir Reynolds, and today we're lucky enough to have a close friend of mine, actually, Terri Anne Welyki, VP of Communications with Barksdale Resources. Trades on the TSX Venture Exchange under with the ticker BRO, B-R-O. And today's episode, we're going to really unpack the mysteries of investor relations. Terri Anne, how you doing?
I'm great. Thank you for having me. This is my second one today.
Awesome. Well, I know we've been trying for a little while and you've been busy with some travel and got lots on the go. So really excited to sort of unpack all that. Maybe before we get going, you could maybe give the viewers a little bit of background on who you are.
You bet. So I'm Terri Anne Welyki. I work with Barksdale Resources currently. I've been in this mining business for about, I want to say almost 20 years, but I started my career working with publicly traded technology companies. And then when that bubble blew up in the early 2000s, I moved to Vancouver from Ottawa and I tripped and fell into mining. And here we are.
And I think that's probably about the time that we met. It's going on a few years now, but the one thing about you, when you're on a project, when you put your name to a company, chances are they're really going to work out. I know you put a lot of energy into it. So I thought, who better than yourself to sort of kind of demystify and kind of get into the investor relations sort of chat. It's a bit of a controversial topic. Some people don't think you should spend any money. Others think you should spend a lot. Maybe you can help us demystify it and we can pick your brain a little bit. Maybe before we get into some of that, could you share maybe perhaps a memorable IR experience?
Yeah, I think from when you're in IR, if you can, when you land that first analyst coverage, it's probably, that feeling you get of like success, like finally you're on a project that somebody will actually cover, number one. Number two, they put a buy on it. It's really exciting. In order to get, to catalyze those, you have to recruit, analysts to site. You have to show them something really compelling, and you have to help them kind of try to think outside of the box a little bit and maybe get, have a little bit more of an edge. And you want to get that first one out of the gate. And I think that was probably my most memorable moment because we had an analyst cover Barksdale actually. It's technically an early stage exploration program or company with, there's historical drilling, but there hasn't been any modern drilling up until today as of recently. But at the time we gained analyst coverage, we didn't really have that much for an analyst to sink their teeth into and to really quote unquote cover. But we have the luxury of being next to South 32. And when you do actually get the guys on site and we're basically at the same location. And when they really see that, they really can get creative and get the wheels turning. And we landed our first analyst just on the back of a site visit. So that was really exciting. So when you can get to that, I think that feels really good.
Yeah, excellent. I remember when that coverage, when you obtained that coverage, and I was actually a little bit surprised about the stage of the company. So kudos to you for getting that. Maybe you could explain a little bit more to the viewers. What do you bring to a company in your capacity when you're overseeing their investor relations strategy, and what do you sort of see as your secret power?
Secret power. Well, I think first and foremost, I won't associate myself with the company unless I write a check first. I have to be an investor. I have to believe that it is something, of merit, something that I believe I will make money on. If I believe I can make money on it, then I will throw my name in the hat to work with them. Barksdale's one of those companies where, I've invested a significant amount of my net worth into the company. And I do believe it's an excellent project. And I'm very excited to get drilling again. But yeah, I think first and foremost, when you have skin in the game, you can articulate the story in a much better way, in a more compelling way. And you dive into it, you sink your teeth into it a lot more. So you really dig in to understand the asset and the investors that come along with such a strong asset. I'm a relationship builder. I believe in old school IR, getting to know the people face to face. So I think my secret power is making sure that we have those very strong relationships with investors and making sure that all the right people are in the same room. Networking and making sure that your CEO is in front of the right people and that your VPX is meeting the right people, that all of the components of the company, everybody's meeting the right people, the people that they need to know. And that goes from, I know I'm just IR, but you get to know, when you're at conferences, you get to know the drillers, you get to know the permitting people, you get to know so many people from all the facets of and stages of mining, and making sure that you're really, really, really well networked from soup to nuts. I think that's a really powerful thing. So I guess that's my secret power.
Yeah. And now, last time I checked and last time we chatted, you identified as a woman. So as a woman, you've started off in a pretty male dominated industry. Are you starting to see more women get involved in public company management teams and on boards? And do you think the
Yeah.
industry could be doing better?
Well, we can always do better, but I think in the last, from when I started to now, yeah, it's really transformed. Women are really stepping up to the plate, and I'm seeing a lot more women CEOs. I mean, you've got Alexandra from Empress out there, really giving her, and I trying to remember so many other women that are involved as CEOs and as board members. I'm an executive at Barksdale, but I also have my director's hat as well. So the men in this business have really kind of opened up and welcomed us in, and I think we're seeing a lot of really great progress.
It's grown up a little bit because it
It
used to be
has.
kind of a bit of an old boys club.
It still is, but we sneak in there.
And you mentioned earlier that you don't want to be associated with a company unless you write a check. So what type of investor are you?
I'm a holder. A
Yeah, you're a
hodler.
buy and hold.
A hodler, as the crypto world would call it.
Great. That's
Yeah,
good. That's
I'm not
great.
much of a trader, but and I really like to follow the companies and have a great relationship with the CEOs that I invest in. So
Excellent. And maybe before we get too far in, could you define investor relations as you know it? Maybe you could explain to people what that term really means in your mind.
in my mind, it's communications with the investor, building those relationships, being available. Um, it's not just answering the phone. It's really getting to know who you're talking to, um, and building building relationships from retail investors to institutional investors. Being networked into the family offices, and making sure that you're always, always available, and building strong relationships and letting people. I mean, you're not always going to have a good day, so learning how to be very patient on the bad days and being a really, really, really good listener, but also a very good communicator. I think those are assets for IR professionals to really kind of zone into. Is you don't always necessarily have to do all the talking, but really listen to what the investors are looking to invest in, listening to their pain points when we encounter them, and then articulating what the company is doing moving forward to either create shareholder value or remedy a hiccup that we might have along the way. So really communicating the story well, and and being a good listener.
While we're having you define terms, maybe you could explain one that some jargon that we hear from time to time. People talk about deals. I'm working a new deal. I've got a deal. What deal are you working on? What does the term deal mean in our world?
I think that's a really good question. I think a deal is, something that you want people to invest in, right? Like a lot of private, you can't really invest in a private co. It's just, we call that a company. But a deal is something that everybody can kind of participate in to some level, and something that we can shop around and bring to market. But yeah, it is certainly a term we use amongst ourselves.
And I mentioned earlier we were going to talk a bit about there's sort of IR can be a bit controversial at times where some investors or think that if a company that it's a big waste of money to spend any money on investor relations and attending conferences and doing any marketing, because if a company is a good company, that valuation will naturally sort of follow. What are your thoughts on this topic?
If a tree falls in a forest, Yes. Does anybody here? And also, if it's a great asset, valuation will follow, yes, but who's valuating? Right? If you don't have the bankers and the analysts pulling things apart, and they have, how many publicly traded companies are there in the mining space per se? There's a lot of publicly traded companies, and there's a lot of silos. There's, biotech and tech, but just in the mining space, I imagine there's thousands.
Yeah, I would say there's more than, probably just in North America, over 2,000.
Right.
Trade on proper exchanges. So
not every analyst,
quite a lot of competition.
Right. So, and not every analyst is going to know every copper story. Right. There is so much noise out there. So if you aren't doing investor relations in some sort of capacity, whether it be, this much or this much, at some point you have to be able to share the story so that you get the analyst coverage, so that you get the right eyeballs on you, so that you get the valuation that your company or your asset deserves. And there's so many ways to do that now. There's social, there's online, there's old school, there's, guys picking up the phone and outbound calling and the conferences and whatnot. And it's really, really transformed. So knowing what to apply, when to apply it, and what your best bang for your buck at the time is important. But I do think in some capacity, even if you're a very small company with a very small budget, you need to do something to get eyeballs, because the competition is very stiff.
Would you say that people can be both right and wrong, that maybe you can misspend money doing sort of marketing or investor relations activities, spend it in the wrong places, and that maybe that's the value in somebody like you, is that you've been there, you know which things work, and you know how to get a good ROI on the money spent?
Yes. I also think timing of, you see a lot of companies that have, they'll do a lot of marketing. You'll see the stock chart, perform, but there's nothing really to sustain that. And maybe that's because the timing of the deployment of that capital in the IR space, or in to promote, was maybe timed wrong, or
sure, it's missing, perhaps missing the catalyst that holds the valuation.
Correct. Right. If you don't have, you want to market in front of it, ahead of it, or during and after, but you have to have, if that catalyst isn't there, and you're just marketing into thin air, it can be very, very tricky. It's not sustaining. So really knowing, and it's so noisy out there. There are so many vendors. There's so many different things that you can do in terms of marketing now. What is going to work best at what time in the cycle, either, if you're exploration or development or mining, and also in the market cycles, right? Like what's going to work when. It's really hard to determine. So when you have a little bit more experience, there's like these ebbs and flows that you can navigate a little bit easier. But also when you look at when the markets are down and nobody wants to spend money marketing, because in our mindset, it's like, nobody's investing. It's too quiet. Markets are depleted. Let's just save our bullets. Those are the times I personally love to market best, because I always associate myself with a really, really strong asset. And if you have a really strong asset, you should be marketing all the time. If I'm peddling, for lack of a better word, shit or crap, pardon my language, then yeah, you're not going to want to spend any money, because you're going to wait for the market to turn, and even a mediocre or crappy project is going to get wind in their sails. But when I have such a strong, sexy asset, I want to market all the time. It doesn't mean I want to deploy a bunch of money all the time, but I want to be very consistent all of the time, no matter the market. So I think that's important.
Great. You mentioned the term old school IR. Can you break
Yes.
down what that sort of means to you?
What it means to me is I like face-to-face. I like picking up and also picking up the phone, talking to people. Like these email campaigns, these online media campaigns, the social media, this, that, whatever. Handy to have and really good for, to get, to reach out to the masses. But I feel like when people can sit with you, talk to you, and you can build those relationships, the money is much stickier. The investment is much stickier. They're investing in you, not trading your stock. I feel like the other methods of reaching out to people, you accumulate a lot of traders. And you need both. In fairness, you do need both. I lend myself to the old school, where I want to go for a lunch. I want to sit with somebody, get to know them. I want to go to those conferences. I want to shake hands with people. I want them to see our authenticity and the fact that we are passionate about our story, and we're excited about what's to come. You can't really articulate that in a social media post, maybe unless it's a video. But I like the old school, pick up the phone, call a bunch of brokers, call a bunch of investors, answer the phone, talk face to face, and not just do the old email. Like how many emails do you get here on so many companies, and how many times do you just press delete because they're so noisy?
Yeah, and I would say authenticity and actually having an actual person reach out from the company is better than those sort of like, mass mailer sort of emails that the companies send out when they have a news release or a private placement or something going on. I paid attention when it comes directly from somebody, so I think that's probably pretty effective. You mentioned it earlier. You've been in the industry for about 20 years. I would imagine it's evolved over the years since you started. Maybe you could explain what are some of the ways it's evolved?
Well, I think social media was a game changer. It really kind of opened up. We had to learn so many new tactics and learn how to, deploy that effectively. COVID taught us how to Zoom, right? Like that was like nobody that was brand new to a lot of people, and effective. Actually, it was really effective, and it did its job at the time, and we still use it today, moving forward, even though I think we really do need to get back to in person.
Right. So I'm pretty zoomed out.
I am
I think a lot of people are, because it started to become almost an overload. You could be on a few of these Zooms a day, and every IR firm sort of learned the power of it. So I think we sort of needed some balance. So maybe we have a bit more balance again, where we get to see some people in the real world and do some in-office meetings again.
Well, and I think it's healthy, right? Like I
For
think
sure.
it's, we need to get back to moving our bodies and, leaving our homes and and meeting people in person. But it's evolved because technology's evolved. And so we apply that technology, and now we're dealing with AI. Oh gosh, like that's a whole other, you know, a whole other world that we can try to implement to our advantage, but we'll see how that plays out.
Yeah, certainly. So what are a few strategies what are some of your bread and butter strategies, if you don't mind giving away a little secrets of Terri Anne's strategy? What are a few common ones that work out for you?
Secret weapons. I think I have a few weapons in my arsenal. I think the main one that I default to daily is I use the technology or a company, a database. It's a lot more than that, but it's called Irwin. Um, that tracks that tracks literally everything. Everything from, our Nobo list to all of my emails to all my interactions with investors to my reach out campaigns. I think I couldn't do my job without that one in my back pocket. And it basically automates the follow up for me, which is so key. If you don't follow up, you might as well you're doing a terrible job. If there's no follow up, it's just dead in the water. So I
And
think
so this Irwin platform, does it allow you to also like target sort of like institutional investors? Is it a database? Do you have to populate it, or is there an existing database you can
it's a
see maybe if
collaboration. So it's basically a fully baked database with not every single family office fund or whatnot, but it is heavily, heavily, heavily populated. And I say not fully because people leave the industry and come back. So
sure.
there is some churn there, but it is a fully baked database. The targeting, being able to target, is such an important part of my job, right? Who's investing in copper? Who's investing in copper in the US, specifically Arizona? Who are the people that have invested in my peers? Those are the people, that's kind of the low hanging fruit, right? If I know you've invested in this, well, chances are you're going to like that. So I will hyper target individuals or funds or investors that I know. And with Irwin, I can see that. Like I can actually see it on my screen. This is the list of people. And then I'll go in and create a campaign around that. And then on the back of that, actually pick up the phone. So you do the email campaign, and then I actually pick up the phone on the back of that and reach out to those investors as well. But yeah, it's a great tool. But I think your best asset is if you go to a conference and you meet a whole bunch of people and you come back with a number of different cards. If you don't do anything with those cards and those people that you met, they're on to the next deal because they've already met 18, 20, 40 other companies at that same conference, and somebody else is in their ear. So you have to follow up, follow up, follow up. And I think that's really the key to the business. Like that's the master key.
Great. So, what are a couple common mistakes the companies make with their IR strategy?
I think number one is deployment, the timing of the deployment of capital.
Right.
Right.
So they deploy it when they're not ready, or they don't have the right sort of catalyst, or they end up not deploying it at all when they do have a story to tell. So sort of both.
Like you just nailed it. You absolutely nailed it there. It's exactly that. I think it's a dance that you really need to learn well. Save your bullets for when you have something. And if you have something and you didn't use your bullets, then what was the point of having them to begin with, right? So I think the biggest mistake is the timing of capital deployment, or, working with people that don't believe in communicating the story broadly at all. And there's a way to communicate the story broadly without having to spend a lot of money at the same time. But it just takes longer and it takes more work. But it still is effective. So find a group that believes in telling the story.
What do you think about some of these budgets out there? There's some big ones these days. And is there sort of a rule of thumb, like what percentage of the treasury should be spent on investor relations? Any guidelines or any things that you've come across in your career that you can share?
My preference, if I had all of my Christmases come together at once, I'd like to see 10 to 20% of the capital raise go to marketing, especially if you have a great story. You want to market it. You want as many eyeballs on it as possible. I think if you go above that, then you're failing your investors. Because most of the money needs to be deployed into the ground at all times to advance things. But I think a moderate 10% is a very decent number to work with. And then if you've got like a really hot market and a really, really strong project, you could even bump that up slightly. But some of the budgets I'm seeing out there, I'm like, I hope they have something to back that up, because they better have some barn burning news, because what you'll see is it'll travel north and then it'll just come screaming back down. And that's just really ugly.
Right. And retail gets left holding the bag, as they unfortunately usually do.
Yes.
That's sort of a good segue kind of into the next question I was going to ask, which is, a lot of people maybe don't know who get into an investor relations career, but because you're on the front line, so to speak, you're directly communicating with investors and brokers and analysts and bankers. It's a good, strong relationship has to be sort of made, but then they also look to you, and they sort of judge you and the company's success. So track record matters. Yeah. Can you sort of explain that topic a little bit more for some people?
They used to say you're only as good as your last deal.
Yeah,
Now
I think they still do.
No, I think it's changed a little bit. Now they say you're only as good as your current deal.
Oh, okay. There you are.
So they hold your feet to the fire pretty aggressively. And sometimes I have to wear bubble wrap, and
so is that why you're very careful about making sure it's a company that you can write a check into, and making sure that there's a strong asset and a good team? Is that you're concerned about your reputation? You've obviously, I've known you, and every time you've gotten onto something, it's either resulted in an exit or a significant sort of capital gain for people that followed in early. So is that part of your process? Is like, hey, I'm going to be on this for a while. People are going to look to me on this thing, and I have to be able to trust and align with the people I work with?
Yes. And more so, like, I am an officer of the company, so I have to disclose my investments, all of my trades. And I think that's an advantage for me, because when you have, I want to use the word hiccup, or when markets are bad and, the stock has a pullback and you're receiving all these, calls, a lot of it can be really negative. And again, I have to put my bubble wrap on and make sure, but when you can sit there and listen from the same seat as the investor, right? Because I am first and foremost an investor. We're in the same seat. Your ability to listen and to really empathize with the person or the investor that you're talking to is very easy. And at the end of the day, because I'm part of the company, I know I have an idea of what's to come. So you can just respond back to saying, you know, I'm an investor too. This is how I see us progressing forward. Here's how I see markets getting better, or here's how I see what we can do on the ground to get, you know, the stock to appreciate a little bit more. And I think it gives them comfort too, knowing that one, I'm holding my position. Two, either I've increased my position, and three, like, we're aligned. We're in this together. So I think it gives me a little bit more of advantage by being an investor in the companies that I work with, and being a significant investor in the companies that I work with, not just, you know, a few shares here and there, or just, you know, having a, you know, it's not a paycheck for me.
Right. So let's dive a little bit more. What does Terri Anne look for in a deal? At this point in your career, how do you pick who you want to represent?
I'm an asset girl, so they say never fall in love with an asset. I have to challenge that, because if you have a very strong asset, you can get some of the most incredible investors to lean in with you. You know, if you can get a major that to step up to the plate and back you, it just brings so much momentum. So I really think a very good, strong asset, an asset that is investable, that a major would invest in, or a strategic, or, you know, funds that, and
Right.
assets that are sought after, right? That can show a pathway to either an exit or development is important. Aside from that, a team that is driven, a team that is very much, you know, hungry for a win. And you're seeing a lot more young people enter the business. You're seeing a lot more younger CEOs. And I think that's brought a lot of enthusiasm to the industry, and a lot more education as to, you know, what mining really is, and the benefits that they bring forth. So I think a really strong asset is my number one pick here.
Do you know when a company is going to be successful? Do you have a crystal ball?
I don't have a crystal ball. I wish I did. However, there is a tempo to our industry. And when you see M&A start to percolate, usually more good things happen. And that's when I tend to lean in a little bit more into positions that I have. But if I had a crystal ball, man, would this be a lot more fun? It would be a lot more fun.
So a hot button question: what red flags should investors look for and look to avoid?
Oh, so many. Lack of communication. If they're not picking up the phone, well, first of all, I always pick up the phone. Because I like running into the storm as well, right? In order to get through, you got to get to the other side. And when you get to the other side, the sunshine is so bright and positive. Not answering the phone. If you cannot reach the company that you've invested in, you've got a problem.
Excellent. Any other sort of common red flags that you've sort of encountered?
Massive IR programs, massive marketing programs with no activity.
Okay.
If you look at a stock chart, and you know how you see the news, if you go to Stockwatch and you have all the news out there, if you just see a stock run, but there's no history of news, that's scary to me.
Okay, great. Those are some good ones. Thanks for sharing. And I agree with you on them all. You can only sit on so many boards, and you can only represent so many companies. What are some of your favorite deals right now? So we've heard a bit about Barksdale. That's one you officially represent. But what about a few others that you might be a shareholder of? Can you talk your book for a few minutes?
I can. What do I? Well, I sit on the board of Stallion Uranium. I'm actually loving the uranium space right now. The CEO, Drew Zimmerman, is extremely proficient in what he does. He's a workhorse, very thoughtful guy. They just had their maiden drill program, and the next program should deliver some very exciting results. So I'm on pins and needles to get the drills back on that program to see what the technical team can pull out. That would
And
be.
where are they? Just for those of my audience that don't know, I know we had Drew on a while back, but maybe you could just give a quick overview. Where are they located? Where are they drilling?
So they are in Saskatchewan in the East Basin, in the West Basin, and they had their maiden drill program that was very fortuitous. And really, the next drill program will be is basically designed to vector into hopefully a very well mineralized system. So it'll be really exciting time.
So that's a pre-discovery play.
Pre-discovery, which I think will bring a lot of excitement into the uranium space again, because right now I think all of the focus is on later stage companies, but I think a new discovery in the space will be welcomed. Bring some life to it.
Excellent. Yeah, those are high risk, high reward plays. Let's hope they live up to their stock symbol. It's a good one. Stud.
And I do, you know what? I do gravitate towards a really good ticker symbol. Yeah.
Well, that's a good one. That's a stud.
Yeah.
So there you go. What other companies that you might be a shareholder of are you liking? Anything else any others that you want to mention?
I'm loving everything in the copper space. There's a couple of really strong teams out there. I like there's two companies out of Wyoming that I think are really special right now. There's US Gold, that's a development story. Incredible team led by George B., veteran in the business, ex-Barrick, like super incredible team. And then I really like much earlier stage, but these guys are really thoughtful. When you look at their technical ability and they're actually entrepreneurs first, which I think is a really important piece of our business that's kind of missing. These guys are from Relevant Gold, entrepreneurs first, extremely technical, but their story's developing really, really well. I've been a shareholder since before they went public. I tend to invest really early, but that's a compelling one that I've got my eye on, and I've recently bought more stock in. And then there's a couple of really stories I have my eye on that I don't really want to share quite yet because I haven't built my position up quite yet. But one is very special. It's in BC. It's not a mineral it's not gold, it's not silver. It's a very interesting metal that I've recently learned more about, that I'm excited to see where this one goes. But we'll see how that one plays out. We'll circle back with you in a few months on that one.
Sounds good. Well, thank you for sharing. What do you think about the current mood in mining? Do you think we're sort of in like a stealthy bull market? I see a whole lot of different variety of sort of people's moods that I sort of encounter. What are your thoughts?
I feel like it's really bipolar. I mean, there's like these swings that are just like so bizarre. But I think, gold is performing well. Copper is performing well. I mean, there's a lot of buzz around silver. There's some M&A like percolating. I think I'm feeling really good about it. Like I'm feeling bullish. Like I'm a buyer right now.
Well, that's good. I keep looking back at some of these things that maybe I didn't invest in, and And then looking at my own portfolio, anything that's sort of mining metals related, like pretty much you can, put a blindfold, throw a dart at a dartboard. It's probably up 100% or a couple 100% over the last year. I'd say pretty much since last summer was kind of the lows and the mood sort of turned. So let's hope it continues to be a bit stealthy and that we don't talk about it too much, because when it becomes topical and everybody, taxi driver, the doorman, hairdresser, they're all talking about it, that's when it's like there's nobody else left to invest, and it tends to. So let's just be really quiet about it. What do you say about those that are concerned about dilution? We hear this term all the time: dilution. There's good dilution, bad dilution. I don't really know what good dilution is, but if you can kind of fill us in a bit. An exploration company is going to spend money. It has to go and explore, and they tend not to have a source of revenue, which means they're going to be facing some level of dilution. Can you comment on that topic of dilution?
Well, I mean, there's different kinds of dilution as well, right? At Barksdale, for instance, we're an exploration company. It's challenging, for all exploration companies, it's challenging to raise funds because it is, perceived as dilution. But in order to advance things, you need to drill. But if you can raise capital with your current shareholder base and keep the structure fairly tight, that to me, that dilution is far less painful than if you have to do, a retail raise and it's spread out super thin across, hundreds, if not thousands of investors that you have difficulty tracking. That makes it really, really difficult to navigate on the investor relations side and to keep that communication, to keep the stock trading soundly, right?
Right.
You need a balance between retail and institutional and strategics. So if you can, and if it's too heavily, on the institution and strategic side, that's a blessing and a curse, but more so a blessing, because once you have good news and you deliver, the stock tends to move in absolutely the right direction. So the type of dilution is challenging for some. I mean, all dilution is not perceived as none of it's really positive, but if you can keep your dilution contained within existing shareholders, I think that's a much better approach, or it's better for long term and short term for that matter.
So how many shares, what's sort of a tight deal these days? How many shares outstanding, is palatable? Would be not too many. And I know there's not necessarily like a rule of thumb because it all matters on, your buckets of shareholders, but could you give us any comment on,
And I think it depends on the stage of the company you're at as well, right? Mm-hmm. Where, if you're a development story and you have, X number of shares out, well, obviously you're going to have, more shares out because you've gotten to the point where you're reaching development. That said, I mean, that company, US Gold, has 10 million shares out, and they're like a development story, which is like mind blowing, which is why I like that one so much, because normally development stories have far more than 10 million shares out. They're
like, in 300, 400, 500 million shares sometime. Right? But when you're looking at sort of like maybe an earlier stage, not greenfield grassroots, but maybe they've made a bit of a discovery, they still have to drill it off and develop a PEA, something like that. Would you say like around 100 million shares out is pretty typical and would be?
I think it's typical. I'd like to see a little bit less, only because it shows management being really diligent about that and really paying attention to, protecting their investors. But that's typical, 100, 150,000 shares out. We're lucky we're not Australia. I mean, some Australian company, although the market is hot right now,
Yes,
So
they have more like 1 billion shares out, and they like to take a punt at at something that's 2 or 3 cents.
I mean, but they can make things, yeah, they can get things to move though. For
For
me,
sure.
you know, when I start writing checks into deals, I like it when the structure's tight, you know,
Right. And
especially if
you
it's
got
out of the gate, you
sure.
want it really, 50,000 or less.
Sorry, 50 million? 50 million or less?
Sorry,
Yeah.
sorry,
Yeah.
my bad. 50 million or less.
And I know one of your secret powers relationships. You got some great relationships. You seem to know everybody. Whenever there's a chance to see you in person, I hardly get a moment without somebody sort of you knowing somebody coming up to you. You know a lot of investors and analysts and newsletter writers and financial influencers and whatnot. Who are some that you're following and consuming their content? Any that you think are doing some good stuff out there?
I do have favorites. I like to read a lot. I like different perspectives. I like to read Jay Martin's writing. I really like to read why I've lost my train of thought. Tommy, he just lives up the
Tommy,
street here.
yes,
Tommy Humphreys, he's putting out some excellent content. These guys are really great storytellers. So I like the way that they deliver their ideas, whether that be, different companies that they're working alongside or quote unquote promoting. I follow Daniela Cabone. I really like some of the content and people that she has on, some really insightful people that are kind of a little bit out there. She has more people that are like quirky like me. I would say, you know what, not mainstream.
sure.
They're a little bit more off the beaten path. So I really do like that. And I like some of the fun guys. Like you have some really some great people on your show. And I like the style of interview.
Well,
Because you
we're trying to get better, and I'm trying to do a few more of these where we aren't just talking about CEOs and companies, but we're starting to get to talk to people that are directly within the fabric of sort of the capital markets and can give their perspective. So I appreciate you coming on. Why don't we turn our attention a little bit to Barksdale and get into that? So you've been with the company for over 5 years now. Boy, time flies.
it sure does.
It took you over 4 years to begin drilling your flagship asset. I have no idea how you were able to tread water for that long. And during that time, if you were to buy in sort of on the low to sort of during your tenure to when you did get your permits, it was about a 350% increase in your stock price. So boy, golly, I'm not sure how you were able to do that. But can you give us an overview on the company?
I can. So we are based, our flagship is in Arizona. It's called the Sunnyside Project. It's adjacent to South 32's Taylor Hermosa, which is under development. In the last actually several weeks, South 32 has come out with some excellent news. They received some excellent funding from the US military. They have received the Fast 41 from the feds to advance their project in a more timely manner. They will be in production in 2027 on their main asset that is on the patent and mining claims on the private ground. But they've just announced that they've initiated their federal permit beyond those patent and mining claims, which is super exciting and really de-risks what we're trying to do on our side, which is fantastic. South 32 has just done an exceptional job with that project since they've acquired it. And we are so very lucky to have a neighbor that is just knocking it out of the park. We have the extension to their high grade deposit. It's a zinc, lead, silver, copper deposit. And we're excited to get drilling again. even though it took us over 4.5 years to get that permit, what it allowed us to do was really cultivate a really amazing shareholder roster. We have Tech Resources, which is a major mining company, and super technical that really understand what we're sitting on our side of the fence. They're an investor. We have Crestcat Capital that's in there for quite a significant amount, with the likes of Quinton Hennig, who's super technical, really understands this type of mineralization. We have Ralph over at US Global, again, another very technically savvy investor who's been in this stock for a long time. We have, a major mining family, private mining family out of Peru that have a significant piece of our deposit. We also have Eric Sprott, who's been in there for a long time. He loves he loves the silver numbers on our side of the fence. So we have these really, really big, chunky, very technically savvy mining investors who understand what's on our side of the fence and are very excited for us to get the drills turning again. So right now, our next catalyst should be getting a drill back on the ground, and then combined with the historical data that we've had forever, and the new data that we've acquired in the last drill program, marrying those two, we have enough information now that we're going to be able to vector right into the heart of the system with this next drill campaign. So very, very exciting for me as a shareholder. Really want to get those drills turning again. And we're working with our current investor base right now to make sure that happens in a hopefully not so dilutive manner.
What do you think the upside is here? Is this a takeout target? How crucial is South 32 to your strategy?
Well, South 32 is the natural buyer, of course. You're not going to build a mine next to a mine, and we're really in the same place, right? Like a lot of the times we're not, it's not like a mile or two away. We're literally in the same place. So, they're building a mine and they're moving quickly. Normally, big mining companies like to control the districts that they're in. But I think right now for Barksdale, what we need to do is prove out more of that high grade in the historical numbers that we're seeing, and displace, if we can accumulate more of that same quality of mineralization and displace the grades in their current mine plan, I think that will go a long way to incentivize South 32 to come to the table. I mean, these are really brilliant mining guys. They've got mines all around the world. They know what they're doing. What we need to do is show them some significant grade. And I think, at the end of the day, they will be underground, whether they go right or left to mine will be, I think, a decision of what the grades what the grades will show. They can actually mine our entire side of the fence without a federal permit because there will be no surface disturbance. Like, imagine the timeline that they save, right? Like, time is money. And if they can mine our entire side without a permit out of the gate, like, why wouldn't you do that?
Wow, that's very interesting. I didn't know that. Learn something new every day. Yeah, that sounds very strategic indeed. So, what are some, that sounds like a longer term sort of catalyst. What are some of the near term catalysts, maybe over the next 6 months that we could sort of expect?
Drilling.
I
will be very excited and delighted to announce a completion of getting a drill on site and delivering more results to investors. I think that'll be in the near term. We're going to see a drill in the next few months.
And correct me if I'm wrong, but you have like all your drill permits.
Yep.
But you did encounter some issues with like fractured rock and maybe not the correct sort of drill company or drilling unit or drill setup. I don't know, maybe you could clarify that a little bit, but you did do a little bit of drilling in the last sort of 6 months.
Yeah, so the drilling that we did achieved a couple of things. So we got enough information from that program, albeit we had a few hiccups along the way. the ground didn't cooperate as well as we wanted it to. We did hit in the first hole, we did hit a void. Which, you know what, frankly, when we hit that void, and I talked to the geologist, like the really savvy geologist that we hit this void, because I was heartbroken. I was like, our maiden program out of the gate, we hit this void. Like, what does this mean? And then when you talk to the geos, they were super excited. And I'm like, well, excuse me? And what that meant was, normally when you hit, and South 32 has these voids all over their side as well. What it means is these pockets were formed where so much fluid flow was coming through there that it ate all the rocks. So we know that on the other side of that void, there should be some barn burning mineralization. We just needed to get to the other side. Unfortunately, because we re-entered the old hole to wedge off, the collar was too small to get through to the other side. So we needed to start a new hole. So unfortunately, we had to start a new hole. So we lost about 3 weeks. But the information that we received from that hiccup was extremely valuable. And all of the information that we took from that program is now being compiled into vectoring right into that heart of the system, where we know, you know, from historical, that there's like super high grade material there. So, albeit we had some hiccups, it delivered some really important information that the technical team was, you know, ironically very excited about moving forward.
Cap table, how many shares are out? You already mentioned a few of your shareholders, but how many shares are out?
So we're sitting at about 100 million right now.
And how about warrants? How many warrants are out?
Not too many warrants, because historically we didn't have to finance with a warrant, but there, don't quote me, but I want to say about 8 million.
Okay, and so the company, I'm assuming, is not fully funded for 2024, depending on how much drilling you might want to do. Is that correct?
Quite yet. No, not quite yet, but we are working with our current shareholder base to resolve that problem.
What are the 3 reasons that we should consider investing in Barksdale?
Well, at this price level, it's a no-brainer.
What's the price today?
I think we closed at about 18 cents.
Okay, so it's about an $18 million market cap.
It is. So I think right now, once we get the drills on the ground, we have a great shareholder base that's technically savvy, that believe very much in the Sunnyside project. Number one, the project is strong. It holds a lot of merit. South 32 has de-risked so much in that district. They're doing exceptional work. They will eventually want to control that district. It's up to us to really incentivize them to make that move sooner rather than later. And we will do that with the drill bit. And I think right now, if you start building a position now and we get a drill back onto the ground and we get that going, I'm positive that, you know, our technical team is ready with some juicy targets. And I believe that we'll have an exceptional drilling campaign moving forward.
What's a typical day look like for you?
Typical day, I wake up, have a lot of coffee, and I try to check out the markets first and see which companies have put out news. And if there's anything exciting in the copper space, I tend to get some posts out to social media to make sure that our brand is very relevant, reach out to shareholders, take investor calls, make sure that, you know, we're very active on the outbound communication and that my phone is always available for investors to call. We also, you know, people book meetings on the website. My calendar is open to them. So today I had a couple of pre-booked meetings in between my interviews. So it's quite active, especially now. The phone's ringing quite a bit. Investors are very excited for us to get going again. You know, there was that patch of like investors were anxious. They weren't really knowing what the path forward is. But I think now investors are getting very excited. They know things are going to progress here in the short term. So my phone's ringing a lot more. And the sentiment is far more positive than it was maybe 3 weeks ago. So I'm excited.
Excellent. And how can people find you?
On every Barksdale press release. On the website, barksdaleresources.com. On the contact page, my calendar is available. If not, it's very simple, Terri Anne at barksdaleresources.com. I give people access to my cell phone number for better or for worse. For better or for worse, I give everybody my cell phone number. It's very important to me that investors are able to reach out and get a hold of somebody from the company and get clear answers. So I make my cell phone number and my email available, and my calendar at all times.
Do you have any capacity for any further boards?
It would have to be something very special.
So that sounds like a yes. Maybe if it's the right deal.
Yeah, if it's the right deal, I have to love it. It has to come
that's good. That's good. And hey, is there anything that we didn't cover that you want to sort of wrap us up with?
I don't know. I think, investor relations, you have to it's kind of like the movie business. It's kind of like the acting business. You have to learn to be told no a lot. You have to have really thick skin, and you have to be willing to, show up for your audition over and over and over and over, because the competition is, as noisy and stiff out there as any other business.